We have taken a look at the macro view of Bitcoin in quite a lot of detail. This is something that we do from time to time, and I kind of do videos on this occasionally just to kind of recap on where we currently are and what the history of Bitcoin is actually telling us. Now, this video is going to be a look through a different lens. This is going to be me trying to put on a bullish hat, if you will. Okay, and to take a look at the history of Bitcoin here, and try to look at it as in, some fantastic mega cycle to the upside kind of theory, right? So yeah, we'll see how this kind of plays out. This is going to be fresh to me as it is to you guys. I'm going to work my way through it with you. So hopefully you'll enjoy this kind of content. Let me know in the comments below if you do. It's going to be something that maybe I do a little bit more often if it is something that you guys want to see. So let's get right down into it, right? So what we're going to do is here we have a chart that I've drawn all over, right? It's messy as hell, but that's kind of how my mind is, right? I can kind of look at all these things and it makes perfect sense to me, and I try to explain it to you guys the best I can. We have essentially three peaks. Okay, we have the 2013 peak up here. This was basically a $1,163. We then have a 2017 peak up here, $19,630. And then we have a 2021 peak, which I haven't drawn a line on. I will draw it on here right now. It was, according to USDT, $67,016, which seems a little bit odd. Let me just see if I've got that connected to the correct wick there. Yeah, okay, it's not $69,000, but $67,000. Interesting. Okay, so this is obviously USD, so it is different to USDT. So yeah, we can kind of see we have those three peaks, right? 2013, 2017, 2021, 2021, I should say. Okay, so after we have those three peaks, we can see that there's an initial crash, right? We can see a 67% crash in 133 days after the 2013 peak. In 2017, after that peak occurred, it was a 69% crash in 56 days. In the 2021 peak, we saw a 52%, I believe. I haven't got it marked up. Let me go ahead and draw that in. From the peak, the initial crash was 52%. Okay, and I don't think it was a terribly long time, but we'll go ahead and throw the time on there as well. 70 days. So actually, it's more in line with what you'd expect. So 77 days, in fact. So again, we can see 56 days. And we saw 133 days, and this one was a smaller crash. It wasn't as deep as the others, and it did last a little bit longer. So a lot of people were kind of tripped out by this, myself included, because it didn't really follow the history of Bitcoin at that point. So yeah, so we had those initial crashes. Ultimately, the bear market low came in on the fib levels of 100 or 123.6. or 1.236 fib extension in 2014 into 15, right? So we can see that we finished this bear market low and we stayed above the 1.236 on the fib extension. Okay, this is really critically important because Fibonacci numbers and sequences resonate with everybody, right? And we have to understand that you might not be aware of them, but you're reacting to them regardless. That's the whole point of the Fibonacci sequencing. So when we kind of see the Fibonacci numbers here reacting to 1.236, on 1.236 also being a key number within LA theory, we know that anything above and beyond 1.236 would be bearish for a longer duration. Anything kind of going down to a 1.236 on a C wave is kind of your maximum kind of expectation. You don't expect it to go any further than that, and anything further than 1.236, you would assume that it's no longer like a WXY. You'd turn it into a WXYXZ, right? So really critically important. We can see in 2015 here we bounced from the 1.236. In 2017, we can see that we came down and we bounced and then we came down again. This time we stayed between the 1 and the 1.236. We did not extend above and beyond the 1.236 fib extension. Again, right, falling in line with your expectations of a C wave or a Y wave, right? You haven't expanded above and beyond those, and it's exactly kind of in line with what happened in the previous bear market. So these two bear markets were very, very similar. Not only did you have the initial crash of a very similar number, the length and duration was also not too dissimilar. It was slightly shorter in 2018, but essentially we came right down into those low levels, not above and beyond 1.236, but above the 1-to-1 ratio. So everything else there was very much aligned, right? We weren't seeing anything different in the 2018 bear market than what you saw from the 2015 bear market, other than the fact that liquidity was vastly different and price was able to react slightly differently. So other than that, you stayed within parameters, right? You stayed within a confine of a certain key area. Now, I don't have any of the Gaussian channel on here, but again, the Gaussian channel was following very similar rules on both of these kind of scenarios. So going over into the 2021, then what do we see? Well, we obviously had the 52% crash in a little bit longer time, 77 days. We bounced up, okay, and then we fell down. This time, though, we've fallen down deeper than the 1.236. We've fallen down deeper than the 1.382. And we just narrowly avoided hitting the 1.618. Now, these are key Fibonacci levels. These key levels are vastly different to what we had seen in the two previous bear markets, right? And this is where data has changed, right? We can't just look at Bitcoin's history, look at indicators that were working as per the history of Bitcoin from 2013, 14, 15, all the way through to 2017, 18, and think that those indicators that now we just happen to coincide with and bounce from mean that we are following the exact same data. We've got new variables, and new variables mean new data points that we have to acknowledge. We cannot just blindly ignore them, right? So let's assume that, those indicators are working, and, who cares about Fibonacci sequencing, right? Let's just park the idea of a fib number, right? No one cares about fibs. Let's just pretend that Fibonacci just doesn't exist, right? And we don't know that it's gone down deeper than the 1.382, right? And we just think that it's the same as previous bear markets, right? And if we ignore these variables, then it would very much look like the bottom is in. However, if we don't ignore them, it looks like we have more downside to go, and this could be pretty critical in where Bitcoin could lead Bitcoin in the future, right? So we're not impulsive down, and we're not trending down from an Elliott wave theory point of view. So we can't kind of think of we're going a 1, 2, 3, 4, 5 down. That's not happening. In the same way that a 1, 2, 3, 4, 5 upwards is not happening, right? We're not impulsive up. We're not impulsive down, and that's controversial because people really want to be in a trend to the upside. So, knowing that we've got all this data, and I've dissected it down a bit, and we can kind of see that we're doing things slightly different. We crossed the previous all-time high. That's the first time in Bitcoin's history we'd ever done that, right? So we went down lower than the previous 2017 high. We did not come down lower in 2018 than the 2013 high. So again, we've got two variables here that are different. Okay, and we're not going to dissect a load more, but we know that we've gone down deeper on the fibs levels, and we know that we've also gone over and crossed the 2017 high. Two things that never happened in Bitcoin's history before have happened this time. But there are people out there that want to look at Bitcoin history and say, look, history is repeating itself, right? It's on a 4-year cycle, and we've got all these indicators that are telling us that we're in a bull market now, all that kind of stuff, right? Now, obviously, I don't think that's the case, because I think these two variables that have changed are critically important. We also have all the on-chain stuff that I talk about all the time, and that also does not support the idea of a bullish market. So we know that all that kind of stuff. But let's go ahead and actually jump on over into something else. Let's just delete all that off and have a blank canvas, right? If I was to look at this through a different lens, ignoring everything that I have drawn up there, and we're just to look at, this blank canvas here, one of the concerns I have in this space is that there are people out there that really want to kind of make the idea of a mega cycle. And I say mega, right, rather than like some kind of super cycle, because a super cycle just simply wouldn't do this justice. Okay, and I can make this work briefly. Like it's not the best, but I can make it work. I can make it fit. Now, with this idea, it is a pretty interesting one. And yeah, okay, let me just run you through this, right? Okay, we're going to work through it together. So here we have everything from 2011 all the way through to current, right? This is Bitstamp, USD, weekly chart, and all that kind of good stuff. So what am I talking about? Well, the first thing we need to concern ourselves with is when we have a 5-wave structure like this, they call this an impulsive structure, right? And the Fibonacci numbers are very, very important, right? So if we measure the wave 1, move the fibs over to the wave 2, right, the wave 3 should be at least 1.618 times that of wave 1. Okay, wave 4 can go down to about 38.2%. Wave 5 will be then between the 1.236 and the 1.618, right? So we know that that's kind of it, right? So we have this kind of structure, this idea of a 5-wave structure. And it just so happens that this can fit into a lot of these different areas on this chart, right? However, we have to consider, right, if we want this to be our wave 3, it has to be 1.618 times our wave 1. And if we want this to be a wave 5, then obviously it's going to be between 1.236 and 1.618 on the fib levels, right? And so what I'm finding is there's stuff that's being shared in the Discord server and tweets and stuff like that, where people are drawing out 5-wave structures like this, and they're saying we're going to the moon, we're in this fantastic move to the upside. Some of them are even calling this a wave 4 and going up here for a wave 5, right? A wave 3. And they're drawing it out like this, and they're like, we're going up to 100, 300,000, whatever they want to kind of draw it up to, right? Super bullish. And they're not necessarily wrong, okay? I want to kind of make this really clear. This is not an impulsive structure, okay? For the very simple reason that we have measuring the wave 1, move it over to the wave 2. For us to make this an impulsive structure, and when I say impulsive, it's a 5-3-5-3-5 structure, right? So we'd end up with a 5-wave count, a 3-wave count in reverse going down, another 5-wave count going up, and it'd be a big one, another 3-wave count going down, and then a final 5-wave count going up, right? That's an impulsive structure, okay? 5-3-5-3-5. And essentially it's 1, 2, 3, 4, 5 like this, right? And you can see if I were to move this over, you'd end up with it looking a little bit neater. It would look like this, right? And you'd have this 1, 2, 3, 4, and 5 structure like so. Okay, so that's kind of the idea, right? People want this kind of structure, this kind of idea going upwards. However, as I said earlier, right, we have to obviously have our wave 3 being 1.618 times wave 1. And well, for that to have happened, Bitcoin would have to be up here. And that would have to be $3.7 million Bitcoin, okay, for us to be in that impulsive structure, okay? So we know that we're not in an impulsive structure, okay? So we know that we can rule out 5-3-5-3-5s. However, there are some things that we can do. And that is to take a look at this not as an impulsive structure. So as I said, like there's people who talk about a super cycle theory, and I can talk about a mega cycle theory, right? And this is simply just because we are potentially only in wave 1, right? And and it could be absolutely insane with the future potential of Bitcoin under these scenarios. Now, this is just USD, so you might argue it's hyperinflation or whatever. $1 million Bitcoin, I think, would just be child's play at that point. We're talking probably, $10 million Bitcoin at this point, right? You can call me crazy, you can call me whatever. Like I say, I'm just playing devil's advocate here. If we were to try to make something bullish, and let's just look through a bullish lens and we're to take a look at this entire structure, what does it look like, right? So let's go into that, right? So there's many different types of wave 1s. Okay, so as I said, we had the wave 1 that is a 5-wave structure. This is your impulsive one. So that'd be a wave 1, right? You have 5 waves going up here, wave 2, 3, 4, and 5, and so forth, right? That's your kind of first one. Your next move inside here is what is called a diagonal, okay? So you'd have a leading diagonal, which comes up, down, and up. This is still going to have that 1.618 requirement for the wave 3. Okay, so we know it's not a leading diagonal that's going on. But there's 2 other types of diagonal that might be something that we can kind of acknowledge, right? And so we've got ourselves something that's called an expanding diagonal. You have a really small wave 1, deep wave 2, bigger wave 3, wave 4, and then a really big wave 5. And what this does, if I grab hold of my trend lines just to kind of demonstrate this, you can kind of see that it expands out like this. Okay, they call it an expanding diagonal. And that, again, doesn't really fit our situation here, in my opinion. But again, it's another kind of thing that you might see in a wave 1 situation. So let's go ahead and remove this out as well. So the other one that appears is something that is called a contracting diagonal. And I think this one fits quite well at the moment. Big wave 1, wave 2, wave 3 that doesn't really do terribly too much, wave 4, and then a wave 5. And this looks like it contracts down. Okay, I'm not sure if I've drawn this perfectly well, so we'll see how this kind of plays out. But essentially it looks like this, and it's probably needs to bring that wave 4 in just a little bit to make it a little bit easier to kind of spot, maybe bring in a smaller wave 5. I mean, you can kind of see here that it contracts down rather than expanding out. And this is where I think this particular pattern might actually start to fit and start to make sense. So let's go ahead and think about that. So if we come in here with a wave 1, a wave 2, a wave 3, and a wave 4, might even be that we're on a wave 4 right now. I don't know. We'll have to see how that kind of plays out. In fact, yeah, I'd probably say that we're on the wave 4. So it'd look like this. And no, we can't be in the wave 4, sorry. So it'd have to be in a wave 1. And then we'd have to have completed that wave 5 up there. Okay, so why this? This has some very specific rules to it, right? Wave 1 has to be the biggest wave in a contracting diagonal. Okay, in a contracting diagonal, wave 1 is the biggest. Then you have wave 3, which cannot be the smallest. And then wave 5 would be the shortest, okay? Now, you don't have that 1.618 requirement, okay? So you know that that would be a pretty reasonable expectation here. The other thing you got to bear in mind is if we draw some trend lines on here, you need to try to make this look visually like it is contracting down as well. And I think, for the most part, it's kind of loosely there. It's not perfect by any stretch of the imagination, but it kind of gets you that kind of idea that we're in this kind of structured point up here. You kind of see it almost contracting down, but it's not perfect. But like I said, I'm trying to look at this just from a bullish lens. I'm not trying to look at it as a bearish lens, okay? So if I'm trying to make something fit, this is the only way I can try to make it fit, right? We know we're not impulsive. We know we're not leading diagonal. We know that we're not expanding diagonals. We know that there's nothing else really going on here other than corrective structures outside of this potential bullish movement, right? So what would that mean? Well, it would mean that we'd be in a wave 2 situation next, or in that wave 2 situation. And unfortunately, this is where the bearish side would have to kind of kick in a little bit, because we would have to see a reasonable retracement in price. You know, I say reasonable, it'd have to come down a pretty fair chunk. It's not guaranteed, but it would be something you would expect to kind of see within these wave 2 situations. You expect them to come down to 50%, maybe even up to 88.2% of your entire wave 1 situation, which is these 5 waves, right? So I don't know. Like, I look at it and I think, okay, if I'm trying to really make a case for Bitcoin going up to some crazy high numbers, you know, then that's kind of how you're going to have to look at it. But yeah, I can't see it really truly playing out, if I'm being brutally honest. I think it's really important that we do reflect on things that have already occurred and that are occurring in the space, right? So when we take a look at this one here, we can obviously acknowledge that there's a lot of things that have occurred over the years, right? And we know that we've done things differently in 2022 that haven't happened in Bitcoin's history prior, right? We know that the future isn't necessarily looking massively bullish right now, and therefore we can expect further downside. And if we were to look at everything from a bullish lens, even this under a bullish lens tells me that I should be thinking about deeper corrective action before we actually start that next big run to the upside. And of course, it's possible that this is not a diagonal at all, right? And all we're here doing is the idea of a corrective set of actions. And it could just be that what we've got going on is an ABC here, quick correction back down, and we're doing a double zigzag pattern, and we've got to come up, right? And we've got to hit those highs. And a double zigzag is good. A triple zigzag would be better, but at some point there's going to be a massive crash, right? And we don't know when that's going to necessarily be, but you know, there's lots of things to kind of think about when we try to start to look at a bigger macro picture for Bitcoin, right? I know a lot of people want $1 million Bitcoin. A lot of people are talking about $100,000 Bitcoin. I think, you know, that it's all fair play. If we're doing a double zigzag like this, right, and we take this entire structure from here to here, if I can get it, there we go, move it over. Let's just hypothetically say we do manage to just get into a 14K low. Then we are talking like $300,000 Bitcoin. We're not just talking $100,000 Bitcoin, right? You're talking a pretty significant surge. But you got to come down before you go up, right? And a lot of people are just impatient and not willing to kind of go through the process that needs to unfold, right? A lot of people want to be more bullish than they probably should be. So we want to be a little bit cautious. But for the most part, to me, it looks like there's definite upside. It's just a case of being patient enough to let it kind of play out. But let me know what your thoughts are in the comments down below. Do you like this kind of content where I kind of take a bigger macro look and try to digest it and dissect it in different ways? Let me know in the comments down below. If you found it interesting, informative, useful, smash the like button. If you're new, subscribe, join us down in Discord, guys. Check it out. I don't think you'll be disappointed, and I'll catch you all in the next one. We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.